Well, let's get in Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. What do you do with HDFC Bank? One would have thought valuations were attractive, all the bad news in the price. But today you're going to be getting it at around 1,500 rupees. Would you be a buyer or would you stay away till you see some improvement in the NIMs and the operational performance?
Good morning, Nigel, and thank you for having me on your show. That's a tough one to say because all of us have been bullish on HDFC Bank and it's been a huge underperformer. And now we have a result like this, which is, I think, is okay, but I think investor expectations were a bit on the higher side. But I think valuations are very undemanding from historical perspective and versus peer group companies as well. And if you have a slightly contrarian streak in your investment strategy, then I think HDFC Bank can find a way into the portfolio unless it is already there. Because most portfolios do have HDFC Bank given its track record and its massive weightage in all the indices. So from that point of view, if I already have HDFC Bank, I'm not adding at these levels. But if I don't have anything in my portfolio, then these are good levels to get some exposure to HDFC Bank. See, if you're bullish on India and you're bullish on the India story, the capital goods cycle, consumption, investment theme, if all of these things have to play out, then HDFC Bank has to do well. And it's just a matter of a quarter or two before they start to get the synergies going and start to deliver market, I would say, industry leading growth rates in terms of deposits, advances, and profits as well.
Dipan, hi, good morning. The problem is not so much related to HDFC Bank, but what the read-through will be for other banks, right? Because if this net interest margin compression that we saw, if it's a systemic issue because of the rise in the cost of funds for the industry overall, then what are we looking at in terms of other banks, ICICI Bank, Kotak Mahindra Bank? Are you expecting pressure there as well? And if you are a stockholder there, what would you do?
Yeah, good morning, Sonia. I don't think that, it's a industry-wide trend. Of course, there is a pressure on net interest margins. But look, the volume of business is growing very well for the banking industry. A lot of companies are experiencing high teens type of growth rates in advances as well as deposits. And that should cover the whatever pressure is there in the net interest margin, which means that the net interest income can still deliver very healthy growth. And I think to an extent, costs also have stabilized. And of course, most importantly, the NPA cycle has not picked up for the banking sector. So I think banks on the whole can continue to deliver same kind of growth rates we've seen in the past 3-4 quarters. So I wouldn't like to extrapolate HDFC Bank's number to the rest of the banking industry. In any case, I think Federal Bank, Bank of Maharashtra, two other banks which came with numbers were pretty decent.
Dipan, hi, morning. Just a few more names. One is LTI Mindtree. Lots of earnings cuts post the numbers which have come through. And of course, it'll have a rub-off on mid-cap tech maybe as well. And ICICI Pru Life, weakish numbers here, if you have a call.
Yeah, I think both numbers are more or less in line. And Prashant, this is going to be the trend, that numbers are okay, but investor expectations are on the higher side. And because of this expectation gap, you can expect a correction in stock prices. And also valuations are not really attractive. I think whether it's LTI Mindtree, which is going at premium valuations well above Infosys, TCS, and the likes, or if you look at ICICI Prudential as well. So it's just that the numbers are pretty much okay. 1 or 2 soft quarters here, they won't change the long-term fundamental trajectory of these companies. But from a risk-return profile, when you look at the margin of safety, you don't want to buy any of these two companies. So I would say that it's best avoidable. But these companies have been great wealth creators and are there in many portfolios. So I would want to sell also at these levels. So you could classify both of them in your portfolio as a hold.
Okay, classify in your portfolio as a hold, both of these stocks, right?